How we doing, guys? True Crypto 28, Mr. Anderson back again. Wanted to do another video. This one, just basically the anatomy of a trade. Came up with the trade yesterday. Things have been happening on in crypto, at least on a much lower time frame. Ultimately, I like to look. Usually, what I was doing last year. Let me turn this one off and put this indicator on here. So during the year, I was taking things on a little bit higher time frame. What does that mean? It means that maybe I found a trade on a daily scale like this. Just these, I wasn't using these indicators. I'm just giving you an idea. Like for instance, this indicator gave you a buy here, so I could take that, and even though this was a counter trend, you could see that it gave you an explosive move, right? So I was able to play things on like a 4 hour time frame. Obviously, the previous year you could do that a lot. You had significant uptrends, and the counter trends would still work even on a higher time frame. The point I'm making is that we're heading into a coil, massive coil. What a coil is a triangle, right? It doesn't really matter how you draw it. You draw it however you like, but it doesn't even matter. Forget the touch lines or anything along those lines. The key is that we're in some form of a pattern that's tightening, period. Whether you take it from here, whether you want to say it's descending, regardless, what is definitely happening is the range is squeezing, right? We're squeezing down each time and squeezing and squeezing. So what's happening with that is that the time frames are squeezing as well. So if I can get rid of this, ultimately what it does is it just puts you in a position to where you got to adjust. I mean, it's very difficult right now when we're getting down to this very narrow time frame to say, hey, you know what? We're going to go ahead and take something on a daily scale, at least when it comes to crypto or Bitcoin. You just can't. Because a lot of times you'll get that signal, and we got some good ones. Look, this was a good signal on a daily time frame. You took it, it played out well. I did that 100x challenge before, and I mean, whether the timing was perfect or what, basically the first trade was here and took us to here and got this signal. This was actually a variant of the 100x challenge the indicator that I was using at the time, where we got these plays. I think it was a combination of that and this one. Yeah, right there. You see that sell signal? So basically what happened is literally the first 100x challenge trade was this one, right? Which at 100x was something insane, over 2,000%. And this one was also, so it was a back-to-back 2,000% gainers. So that was pretty awesome. But ultimately, you're not always going to get that. You're going to be in a situation where you have to face the reality that since the time frames are squeezing, you might have to adjust as well. So I can take some of these off temporarily. We'll get back to them. I might include something like a price action channel as well that I think some people should start looking into possibly using as well. But what do? Basically, you're going to find, you want to do anatomy of a trade, you're going to start with clearing everything and putting yourself in a position where you find a trading range, right? So let's look at the most recent trading range. Now, I do want to go back a little bit. Reality is this. You should say this. Look, I'm going to find a trading range. In order to do so, let me start with the most recent swing high, right, which is right here. And that's going to be a resistance. This is not complicated. We're talking about literally drawing a line at the rejection point of the previous move on a daily closing basis. So when we talk about technical analysis, I always say this. Technical analysis is not rocket science, because it's not. But it is definitely a science of discipline. And that's the key in technical analysis. Can you be disciplined? You do the same thing over and over and over again. Can you do it in the face of a loss? Are you willing to say, you know what, sometimes I can identify a pattern that's 70-30, but I'm going to roll with the 70% the vast majority of the time because I'm going to play the probability, even though for some other reason I might have an inkling that it's going to go wrong this time. That's getting over your ego and playing the probability. And if you're playing high probability trades at high reward to risk, you're going to put yourself in a great situation over the long term. And that's kind of the concept. So really quickly, I'll run through some of these dailies. I'm not going to break down and teach these particular elements of support and resistance today. We'll get into that another time for sure. But these are very basic ways to look at it. I'm not going to get too specific with it. There's a lot of complicated ways that you can get into it as well to look at some advanced levels. But basic horizontal. This would be a very serious horizontal support because it's the low of the year that held on a closing basis on a daily. You can go into the weekly, which I'm absolutely not going to do right now. So let's just use that right now. Then we'll see that this was a bit of a higher low. Not much, but a bit of a higher low, and that was your closing low of that period. So also support. And we can see, by the way, that this held true, right? This one hasn't been tested, but this one held true so far because you had a test the very next day, a few days later, weeks later, right here and here. So it makes perfect sense. But now let's deal with this fractal, and on a much closer, it's the same time frame, but most in a closer period of time, you also had this one. So you can almost think of this as a catch radius and range. Ultimately, you kind of have a double support area. That's why it's made a lot of sense to test these areas. By the way, prior to this, you would have dealt with this first, like that. And you would have drew a range from here to here, which I'm not going to do right now. And you could see that would have worked out pretty well. And you would have been long in this situation and had a nice move. But let's just play with the here and now. The here and now is right there. And that'll do. But so this is what we have. But you can't stop there, right? Because you just had another little bit of a leg up. And you had a rejection here. So we need one more horizontal. Because in all reality, this was an ugly rejection. Now, one thing I will do, first I'm going to change this color so that we can see this as resistance. But one thing I do that's a little bit, I don't know if it's different, but just something I like to do is when I draw my resistance from this particular line or support, I always back them up. I'm going to take my line, and it's going to stay at the very same point, but I kind of want to see how it reacted with the past. Now, of course, you should add things like volume analysis and things of that nature. And I'm not going to do that right now, but ultimately, when backing this up, we could see that, interestingly enough, this exact level, there was some interaction here. It mattered. You had a huge rejection. It kind of tried to get back. Next day, it failed at that point as well. And now we got back there, and there you go. Makes sense. I mean, you could even go back here, and coincidental or not, it mattered there as well. You could see that once it got past this point, it kind of took off a little bit, and there was a series of rejections prior to that. So I like to do that. You don't have to. So now we got daily ranges, one way up there. Now we're dealing with a few that are close by, and we have our our fail-safe right there. So what do? Remember, everything's happening on a lower time frame. So now I'm going to take this down. By the way, let's make a quick note, very quick note. Right there, we'll put it as higher time frame resistance. Quick and easy. Much smaller though. Here we go. This is going to be high time frame. Of course, it's not weekly, but being that we're dealing with it right here now, we'll call it high time frame as a daily, and we know what we're talking about. You could add daily or something along those lines if you're going to make something a little bit more permanent to hold. But so now we got the high time. Oh, I'm sorry. This is support. Rather give you a little bit of a view of this, even if it takes a little bit more time. So there we go. We got the support, resistance. But to make a trade, we're going to take this down. We're going to take this down to a 2 hour. I've been doing that a lot on the 2 hour recently. And I had this drawn in prior, so I got to keep that in mind that this was basically yesterday. And we could see at that point that hey, it was working out just well. That resistance level that we drew in on a remember this is a closing high that rejected, and therefore it became our resistance. And we could see it resisted well on the 2 hour. Every touch basically got rejected. So more advanced type trader or someone that's comfortable trading support and resistance, you can trade right in here. You could basically look for these levels to pull yourself in a short. Get yourself out, take half of your profits, etc. As you get some nice pullbacks, whatever it might be. Let some run, add to a position. Shedding is something. If you got short here on a wick, you decide to take some profits off. It came back and tested again. You're back in, and that's shedding. That's a very popular way and a very profitable way to make money consistently within a longer trade. But that's on the 2 hour basis. Now, the reality is this. I didn't take this trade on a 2 hour basis. What I was doing is I was actually looking at the flip side. I said, all right, well, let me see what the time is. I think it was right. It was in this area that I started to pay attention to it. And I came and I said, all right, so we bounced from this level. We started to get rejected here. So what I would do now is now I'm going to look on my 2 hour basis and also draw in a low time frame. Now I'm just going to remember this one. I'm not going to mark this at the moment because I'm going to try to keep the video short. But maybe what I'll do is I'll, just for the time being, kind of change the color a little bit. Let's just keep it. That's a lower time frame rejection point and closing point. Like I said, I'm trying to give you a little blast from the past. So this is kind of what I was looking at. I said, all right, so now we're rejecting here. It's not making it far, and we're seeing some heavy rejections. But there's something else that I do see here. The reality is we're also seeing some levels of support. And like I said, it was in this area. So what I did again is now I said, all right, so now that I've drawn something on a 2 hour basis, and technically you could go ahead and draw another one here as a support because it did bounce off this level. So I just want to be fair with everything that I'm showing you guys. But I'm getting you into my mind. So here I was, and I said, all right, let's draw a box. Let's just say it was something, I'm looking at the time. It was in this area. I think it might have been just after actually. But I just want to highlight that area, and I'll erase that box in a moment because I leveled it down then to a 15-minute. Right? So here we are on a 15-minute, and things change a little bit because on a 15-minute, we see it a little bit differently. We had that line that I drew in. But what I started to notice on a 15-minute, of course, this wasn't in play just yet, but I'd noticed that we basically put ourselves in a position where we started to build from there. Okay, so I only highlighted this box because I wanted to make sure I didn't lose my place. And I have this written down on another thing, but I didn't want to just bring it to you prepared. I wanted to go through it to kind of show you how we would do it as if we were going along. So basically what would happen is now you're on a 15-minute. If you're watching this play out, you could ultimately say, all right, well, it rejected here, which is fine, but I'm going to look at a new support level, right? What would be a new support level? And I draw that line here, right there. You might say, well, why are we doing that? Obviously it broke through, but it did break through, and it got caught by the secondary support level right there on the 2 hour basis. But we see it pop through, and then the next candle rejected on the 15-minute. And then as we got further down, we've seen another rejection right here, another here, several here. And ultimately what ended up happening is I was able to find a position right about here. I'm looking at the time, about 8:15. Okay, so right about 8:15, believe it or not, now I'm on a 15-minute. I'm always going to scale down. Let me give you an understanding of this. I want this to make sense because I know what I just said could have easily confused some people. And because I got to move quickly, that's part of it. And it might be partly that I'm not doing a great job of explaining, but I started on a daily. So if I'm on the daily, I'm going to scale down. Normally I would scale down to H4, H6, 4 hour, 6 hour, and look for a trade there. But because I found something else that I wanted to document on that time frame, I then scale down again. And in that situation, because I was actually on a 2 hour, because I know I'm looking at smaller time frames, I scaled down to a 15-minute. But now within the 15-minute, I was looking at this area as rejection level, right? So you know what? Look at this. I'm starting to have a strong rejection here on this 15-minute chart, meaning nothing's getting passes, right? Significantly, at least. It's rejecting pretty quickly. We're seeing the wicks. But I also started to notice that a secondary, very weak support was building. So what's the point of me doing that? Ultimately, I said, all right, here we are. We're getting rejected. It was right around this time frame. So now that I've drawn in something else on that time frame, yet again, I'm going to lower my time frame. And what it ended up doing for me is this. I ended up in a situation where I had something like this. Oh, by the way, for the guys that are using these indicators, I should have put that up before, and I might have to swing back to kind of show you. Let's look at the swing scalper as an example. So, swing scalper, scalper's doing his job, right? On a 15-minute, on a 2 hour, it's going to tell you what it thinks, etc. We see our supports, our resistance, but we're trying to find a trade. So we're in the anatomy of a trade, and We're basically rolling through. I don't know why it took me back so far. So, we could see that it caught it, but on a 2 hour basis, it looks like, hey, you might have caught it late, but you still would have did all right, obviously, because a lot happened there. But that's why you're scaling it down. Let's take this down now to a 15-minute time frame and kind of see how this played out. And then I'll explain exactly how I took the trade and what you could have did that was a little different. So again, now on the 15-minute, the way this worked out is you'll see that the scalper, when you start going this low time frame, obviously is going to give you short up moves, short down moves, because that's the idea of a scalper, isn't it? Ultimately, you're not looking for much beyond 1 to 3 bars. If it happens to extend to a higher time frame, then great. But ultimately, it's doing what it's supposed to do, and you'll see some buys in here. The problem with that is that can throw you off. So if you start to build, your anatomy of a trade to figure out, what, this is what I want to do, and this is the direction I want to go, not as a bias, as actually performing some TA and utilizing your indicator and basically putting yourself in a position to say, all right, now I'm looking for a short, which was the case. Well, then you start to create a scenario that makes a lot more sense. So this was the 15-minute, and remember I said I scaled down. I'm sorry to backtrack there, but hopefully that explanation kind of helped a little bit more than hurt. And the idea was pretty simple, that I kind of got in, and I think ultimately my line actually ended up being a little bit better, like right there. And what happened is this: once this was lost on the 5-minute, this is actually what I wanted to show you guys, is that first of all, I started now seeing short, 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 short. But the moment we lost this line, that support, which is a new support, became a new resistance, because once you lose your support, clearly, it becomes resistance. Now at this point, you had lost it temporarily on the 5-minute bar, but it gained it right back. And on the 15-minute bar, it did not lose it. What I'm going to show you, though, is that in this situation, on the 5 and the 15, remember, it was 15-minute support. So I'm going to keep scaling back. I'm now going to highlight this area because I don't want to lose you guys in this explanation. And this is something we can go over a few times in a few videos. So you can also rewatch this if it's not making a lot of sense to you. But ultimately now in this 5-minute, my shorts start ringing off. I'm already looking for a short. I know that. I'm already expecting what was a support to flip to resistance once it breaks. And in this case, it was ideal because, believe it or not, I was a little bit late. What happened is we broke through. And then the next bar, we came and tested and rejected. And it was actually right about somewhere around this area where I was able to take this particular trade. And that was ideal because it created a scenario to where, we end up with a mega short, a leverage type short position. And then, of course, what was soon to follow was the breakdown. And that obviously extended itself significantly. So this is kind of an idea of an anatomy of a trade. Now this one would have also then flipped. You would have had a double support flip to a double resistance, right? And it created a scenario to where you had that cap under your feather as well. And suddenly you're in a great trade. And now I'm going to stay on this low time frame. When you're on a 5-minute, you could scale it even down lower to look for an exit. I didn't exit well either, by the way. Like I said, this is a high leverage play. I think I exited over on this bar because I started to see, almost like a V bottom, so I had to jump out basically. Even though I should have been looking, right. I had a buy signal come up from my own from my own indicator here, but I wasn't using the indicator at the time. But I am just trying to show you, how you guys can, people that have access to it already, they can utilize it, and the people that don't, just to kind of show you, one, how you can build a trade, and then two, if you are using something like that, how it can work to your benefit. Now let's just say you're not a guy that has one of these algorithms or access to it or anything along those lines. We can find a simplified version as well. This is the price action channel, right? I have this out available on TradingView. It's free for anyone who wants it. What is the point of this? I touched base on this earlier. Well, it doesn't matter the time frame. The idea of the price action channel is basically going to give you some opportunities to find where there's a move that basically has some oomph to it. Nothing more than that. I mean, ultimately, if you're in somewhat of an uptrend and you start to trade above your price action channel, well, then there's a better chance for a move. So anything above the green line, you'll want to try to play long until it comes back into this zone. Anything in the zone, no matter where it is, whether it's going up or down or sideways, if it's in between these channels, then it's considered chop, especially on these low time frames, right? But here we started to lose it, right? The same time of the trade. And right here, you saw an exit. It tried to fight back, but once it lost the channel, see what happened? I mean, it basically stayed out. It went in a little bit over here, and if you got if you decide to exit your trade there, that's fine. You know, it's a profitable trade and that works out. But if you held strong, so sometimes what will happen, especially in these low time frames, is you'll see that it'll drop. So you can kind of be aware of this. If you have a little bit more of a higher risk tolerance and you're looking for a little bit more bang for your buck, a lot of times what will occur is you'll end up getting a drop and then it'll come back and maybe test the top of the price action channel before dropping off again, and you'll start to see that market structure on the low time frame like this to where you get a significant bounce. And then when you get back up here, ultimately, look, this could have broke down even more, but I took my profits right about there, just simply because at that point I'm not willing to risk anymore. You know, ultimately there was good reason to get out right here if I was paying close enough attention, but I wasn't. So be it. But the idea is that something this simple, you know, which doesn't take a long time to set up. Obviously, with the indicator, yes, it makes life a lot easier to give you that kind of signal and to work your way through it. But even if you don't have that, you know, there are simple ways to say, you know what, I can work through this and watch my support become resistance and enter a short that has the potential, you know, of 3.5%. I mean, whether you guys do leverage or not, that's completely up to you. But, you know, at 10x, that's 35% in a matter of a couple hours. At 50x, you're talking about 1.5 times your money. At 100x, you're more than tripling your money. And obviously, don't get into anything that's leverage unless you absolutely know what you're doing. So be very careful with that. And anything that you do trade on leverage, expect to lose every penny of it. So if you have $1,000, you know, look at it as, hey, I'm risking 1,000 because I don't expect to see this 1,000 back again. So know that before you get into these leverage trades. But this is a good idea to look into how you can use something like a price action channel, obviously how you can use the indicator, and how you can get yourself into a position to decide on how you should make a trade. You utilize some very basic concepts of support and resistance. Watch your time frames, get a better understanding of how things are playing out, what time frames they're playing out on, and basically taking it from there. That's it. I'm going to try to keep this one shorter, obviously. Once again, it's True Crypto 28. Mr. Anderson, I will talk to you soon.